Stocks chasing some big milestones. The Dow trying to get to 50,000. The S&P looking for 7K. For more, let's bring in Ed Yardeni. He's the president of Yardeni Research. Good to have you back. Happy New Year.
Thank you. Same to you.
22 times. Some say rich, others say not really, because earnings are going to deliver big time, and you're one of those people, aren't you?
I'm one of those people, and I think the most important lesson of the past few years so far in what I call the roaring 2020s is the resilience of the U.S. economy, and I think investors are incorporating that into the valuation multiples. Usually what knocks valuation multiples down is concerns about a recession, imminent recession, or an actual recession. And I think investors are kind of coming around, in my view, that, the economy has demonstrated its resilience for the past few years under all sorts of pretty intense shocks. And here we are with real GDP at an all-time record high and apparently productivity making quite a comeback.
We talked at the halftime report today on the idea that the animal spirits that everybody thought were going to be there, at the beginning of 2025, were delayed, not denied. I mean, I even heard from a business executive today who told me that he was surprised at the amount of business activities after the holidays already. That speaks to that perception and point, doesn't it?
Absolutely. And not only that, but in 2026, this year, in the next 4 to 6 months, we're going to have a lot of stimulus for monetary and fiscal policies. And that's going to keep the economy growing. And we saw today the purchasing managers for services was very strong. So, look, I think there were animal spirits around last year. I mean, earnings were fabulous last year.
No, but you had the tariffs, and that sort of, negated some of the activity that you otherwise might have
but the
seen.
animals just chewed it all up and generated amazing earnings.
Yeah. They went back to the barn, figured it out. Now they're ready to run.
Yeah. So what else is new, right?
But even Tom Lee, who's bullish, as you know, suggests that, in the middle of the year, you could go into a bull market. I mean, a bear market, excuse me. You could start strong, actually have a bear market, and then recover. There's just a lot out there. There's, tariff uncertainty still, Fed uncertainty still. Earnings have a lot to live up to now.
But these are known unknowns that we're going to know pretty quickly here. And I don't think they're going to be surprises if Supreme Court rules that the tariffs are unconstitutional. Who's really going to be surprised? The administration is ready to come back with all sorts of ways to keep the tariffs going. And then that'll have to be tested, I suppose. We all know we're going to get a new Fed chair, and the new Fed chair is going to be Trump-dependent, I suppose. But the rest of the Fed officials are going to be still data-dependent. And so that's nothing especially new. So, no, I don't think there's actually, other than a black swan event, I think all of the things that can bite us, we know about. I think the market's ready for them.
Do you think we're poised for another double-digit percentage point return year?
Yeah, I mean, I thought we'd get to 7,000 at the end of last year. We're almost there now. And I think we could get a 10% increase to 7,700. So Tom and I are using the same number by the end of the year.
What happened at the end of last year? And you know what? At this point, it doesn't really matter that we didn't have a Santa Claus rally, because if you look at the prior periods when we didn't, the market's gone up most of the time anyway.
Well, it depends.
The next year.
I have maybe an unconventional way of looking at the Santa Claus rally, and that is sometimes it can come early. And so I like to look at November and December. In November and December, you, on average, over the past 10 years, picked up an extra 4 percentage points. This time around, we basically did the same thing, but we did it early in that period.